Hello, it's girl Misha. I would like to take you through today's price action. It has been a while. It has been so long since I last shared my price action reading. So this is a silver chart. Silver US dollar is my trading pair. So it is always good or advisable to focus on one pair. Whichever pair you decide to trade, just focus on one. Yes, because when you focus on one, it becomes easier for you to master that pair. Yes. So before I start on my trading session, I usually trade the London session. Yes. What I do first is to identify Asian session low. So in this case, this was my Asian session low, and this was the Asian session high in this day. So after identifying that, next is to identify the trend or the order flow, the most recent trend since I trade intraday or intra-session. So I identify the most recent trend or the most recent order flow. I do that by identifying the most recent order flow leg or expansion swing. So in this case, this was the most recent order flow leg or expansion swing. It was from this swing low to this swing high. So after identifying the most recent order flow leg or an expansion swing, or you can call it a dealing range, whichever, like on any time frame you want to use, you can decide to use to the 1 hour, 4 hour, depending on the type of trades you want to take. But in this case, I utilize the 15 minutes range or expansion swing. So this was my expansion swing from this low to this high. What I do is, since the most recent expansion swing was a bullish expansion, therefore I would be looking for buy opportunities. So when you're looking for buys, it is really good to get your setups or your entry opportunities in the discount portion of your range. So you get your Fibonacci and identify your premium and the discount portion of your range. So if the range or the dealing range is a bullish range, or it is bullish sentiment or order flow, you would love to take on your entries in the discount portion of that range. So in this case, we had price trade back into the discount portion of my range. You can see here. So this is the equilibrium. This was the equilibrium of my range. You can see, like, I have my OTE levels marked. So we had price react of this was a 0.71 OTE level. OTE means optimal trade entries. We usually mark out those levels in order to take on the continuation setups. Yes, in this case, since my range is a bullish range, the continuation would be for me to look for buys inside a discount of my range. Yes, so you wait for price to drop back into the discount of your range. In this case, if you're bullish, then it is where you want to take on your entries. Yes, that is done. So after price dropping down into the discount of my range, we had it form this swing low. It reacted off an OTE level, and if you look closely back here, we have a fair value gap. Then this was this is on the 15 minutes. We had this order block, then we had a fair value gap. It was an overlap with the 1 hour fair value gap. So after that, we had price take out sell side liquidity. Here you can see that we had it take out sell side liquidity here. So it established a new swing low. So this was an intermediate term swing low. It was heavy. Yes, that is how I identify my range. So after that, after price establishing this swing low, that took out the internal range liquidity, the sell side liquidity that was resting below here. We had, you can call this a change of character or a market structure shift. Whichever term you want to use, it is very okay. Why am I calling this a market structure shift here? We had this swing low form, then we had this move higher. Why am I calling it a market structure shift? Because from this high, you can clearly see that price was failing to make new highs. It was breaking lower, forming highs, breaking lower up to around this point. We've already seen that this was our discount portion of our most recent significant price move, which was a bullish move. So this was a retracement back into the discount portion of our range. So after this, price took out sell side liquidity. We had this huge expansion. So we had an expansion inside a huge expansion. This was our expansion swing. Then we had a new expansion inside our overall expansion. So we had a market structure shift in here. So this was a very clear sign that now order flow is ready back into bullish. So it was ready for it to continue supporting price higher. Yes. So after identifying that, this is intraday, identifying the market structure shift, then it is still the same thing. You identify the what? The dealing range. Still, you just get your fib. In this case, if I'm to use this from this high, okay, I'll see from this high to this low. So this was now our most recent swing low, and this was now our most recent swing high. So you identify premium and discount portion of the range. This was our premium, this was the discount. You wait for price to drop below the discount or to drop in the discount, because if you're buying, you would love to buy low. Yes, so we always buy in the discount portion of our range. Still, it is the same thing. Discount portion, you can see we had a fair value gap, then this was a bullish order block. OTE levels still there, respected perfectly since the order flow was bullish. Yes, so we had price trade back into this fair value gap. We also had a bullish order block. Price first engineered this liquidity here, sell side liquidity. So that you can call that as an inducement or just simply liquidity. Yes, we had sell side engineered here. Then we had price took out that liquidity inside a fair value gap and an order block, perfectly supported price perfectly. You can see that it really supported price perfectly. Still, it gave this move like here, left a new fair value gap, left a fresh new order block. So if the order flow is bullish, you would love to take on the entries in the direction of the trend. So we had a fresh new order block, fair value gap. You can still frame your entry around here. The confidence came in when this like we had this drop, it formed a new order flow, or by forming this new swing low. So it was showing us that it is really respecting the order flow, the current order flow in which price is printing, yes, or in which the market is moving towards. So we formed this swing low perfectly. Then this was the news. So the news just accelerated the move. Yes, it just accelerated the move or the direction, but the direction was so clear from yesterday or from the other days that order flow has been so bullish. It has been so bullish by forming very huge expansion swings. Like it forms very huge bullish expansion swings. You can see this huge expansion swing. We had a retracement, respected it, then it moved away from there. We had this, you had a retracement, still formed a huge expansion swing, bullishly retraced back. I've already broken down this. So That is how you read price. Like simply, you can decide to use any time frame of your choice. You can decide to use any strategy. The name doesn't matter. You can decide to call it support and resistance. You can call it demand and supply. You can call it SMC. You can call it ICT, whichever name. The name of the strategy doesn't matter. What matters is understanding how to read price, and are you able to capitalize on your edge? Are you able to make profits doing or reading the price or how the market moves? Yes, that is what happened. So we had this huge expansion. This was a news acceleration here in a continuation of the what already identified order flow. Or yes, we had that huge expansion, then a retracement. Then after that we had this is a reversal. So this is a what? This is a pullback now. Yes, because we had this huge expansion. You can call it a pullback or a correction. Yes, because we had a very huge inefficiency in the marketplace. So we had this fair value gap. It became an inversion. Price came here, dropped, left a fresh new bearish order block, retraced shortly. So this is a pullback according to me. Yes, because we had a very huge expansion. Hope that was insightful. I remain Misha.